Hello everyone, this is Brooke, DeFi analyst from TID Research, and today I would like to talk about an interesting protocol called Solstice. So Solstice is a yield-bearing stable issuer native on Solana. So a lot of people might be wondering, we've been talking about all kind of new yield-bearing stable issuers on Solana in the last few weeks. For example, like the Unitas, who's the issuer of the USDU, or the Hilo, who's the issuer of the HYUSD. Then what is so special about Solstice? Solstice is special in the sense that compared to the rest of the yield-bearing stables on Solana, Solstice USX is highly scalable and then very mature. And on top of that, institutional integration of Solstice and its stable USX with the established mature DeFi protocol on Solana, for example, like Communal, is also much more developed. So it means that the Solstice is more promising, at least at the moment, to boost the native stablecoin adoption on Solana, and therefore to make the DeFi market on Solana more attractive. Because we all know that right now the biggest narratives, all the EVMs L1 and L2s right now are all yield-bearing stable loops, whether it's the yield-bearing stable loops or the PT of the yield-bearing stable. And the people are also building on loop on top of it. However, it means that the stablecoin lending APY on Solana is therefore inherently lower than on EVM, and that is actually not good for Solana. And Rise, the birth of the Rise and Rise of Solstice might help to change that, and then therefore that's the reason why I say this can be interesting. So let's first look at how Solstice works and why it is different from Unitas or from the Hilo. Solstice is a very straightforward yield-bearing stablecoin. So you deposit USDC and USDT, and the protocol will use your USDC and USDT to major cryptocurrency, such as BTC or ETH, and then or Solana, and then to deploy short-term futures against this position to make the overall portfolio delta neutral, and therefore farm the funding rates. So essentially, it's basically or highly similar to the, for example, Ethereum's USDE, and for example, like Resolve, let's say USR. The mechanism is very similar, and therefore you can see the yield is actually very similar to those peers. But that is also exactly the reason why Solstice might be much more scalable than the Unitas USDU or the Hilo HYUSD. And the reason why I'm saying that is because if you look at the mechanism of USDU, it is actually JLP hedge stablecoin, and then it depends on two things. The first one is the JLP APY, and the second one is the JLP market cap. So it means that the USDU's market cap is subject to the JLP's market cap. JLP is a large cap asset. However, compared to, for example, stablecoin supply on EVM, it's actually not that huge. So using JLP as the underlying collateral is good in the sense that it generates a much higher yield. So you can see it's actually 17%, which is much higher than the USX by Solstice, only 7.7%. However, you can see the TVO is not growing very fast. So the TVO right now is around 15 to 16 million. In contrast, Solstice, which is only launched for 3 to 4 weeks, the TVO is already 200 million. And then the US unit has been launched for a little bit more 2 or close to 3 months. So I think that's one of the reasons why Solstice is much more scalable. And then not to mention that JLP APY can be volatile when the market is quiet, and then when the funding rate for JLP online assets can be volatile as well. So that is the for Unitas. And for Hilo, so if we look at how Hilo works, you can also see the reason why it is not as scalable as like Solstice USX. So for Hilo, if you supply SO, the Hilo will use it to mint Jito or Jupiter to make them like a yield-bearing LST for Solana SO token. And then once you supply, you'll get HYUSD. But you might be wondering, Hilo is not actually a CDP. It's actually it's not a CDP stablecoin. So how come with the volatile asset for online collateral, Hilo can maintain the collateral ratio and the peg? And the reason is that they are also issuing the leverage token. So whenever people supply, for example, like GTOSO to mint the HYUSD, the rest of the volatility from that additional delta will be transferred to the XO here. For people who want to loan with leverage without paying the funding fee, they can just come here to hold the XO. And the biggest issue is that depending on the demand for people who want to loan, people don't always want to loan, especially when the market is going down. So it means that the embedded leverage can rise, and then that could lead to some issue. And then the second reason is that right the funding rate is like flat or negative. So it means that it's somewhat more attractive for people to use the perp to long instead of using the XO. So that is also some kind of embedded constraint why the high-low cannot grow so fast, like in contrast to other large cap stablecoin. However, for Solstice, all the constraints are actually not embedded within the ecosystem or embedded within any specific assets. Their online collateral is made of, and so all these assets cap is like very huge. So no need to worry about buying too much of ETH. And then their perp market is also very liquid. So that's the reason why they are much more scalable. And even though the yield is lower, it is playing a very important role to at least bootstrap the liquidity. Because on EVM, like for example, 1 year ago, when the yield-bearing stable loop was not even a thing, it is also like the Ethereum SUSDE, which was only earning like 9 to 10%, creating this trend of yield-bearing stable loops. Then lenders will become interested in like lending stablecoin against this bearing stable leverage traders, and then there will be more and more yield-bearing stable issuer, and then to create this positive cycle. So that is why Solstice is playing an important role, and why the fact that it's more scalable than the Unitas USDU or Hilo HYUSD can be interesting. And it is not saying that Unitas USDU or HYUSD for Hilo is not good, just that they are serving different purpose. They are more of a long tail assets that can definitely thrive when there is a mature lending market for yield-bearing stable loops. Just that that is not the case on Solana right now. But if Solstice can grow and then more people can lend to this kind of market, HYUSD and the USDU would definitely benefit from it. Like for example, right now, the hottest yield-bearing stable on EVM right now is XUSD. For example, XUSD recently got listed on Arbitrum, being a very important part of the DRIP program, and it is also the first batch of asset get listed on the Plasma, and then also been a very important role in the incentive program. And then right now, the XUSD USDC loop on Arbitrum and XUSD USDT loop on Plasma are the hottest farming opportunity right now. XUSD, like USDU and Hilo, they are middle to small cap long tail assets, and they can definitely benefit from this mature lending environment. So let's look at what integration Solstice has. So you can see Solstice, which is only live for 3 weeks, already integrated with the Camino, and then with the plan to integrate with, for example, Jupiter and then Drift. Right now, you see that SX loop. The yield is actually not very attractive. However, it means something important. It means that in the past, if you go to Camino, you can see that the only stable loop is the Serve USDC. And this is not even the Solana native. And it's actually, more importantly, the yield is actually not crypto native. It's coming from the private credits. So EUSX is actually the first native loop of Solana with the yield-bearing assets coming from Solana and also the funding asset coming from Solana. And if this can works, it means that this kind of lending market like Camino will know how to configure the interest rate curve, bootstrap the liquidity, set the oracle, and the lenders will understand how this kind of market behave. And it means that when the USDU or Hilo USD, HYUSD listed on the Camino, there will be interest in lending against these assets. And that's the reason why I believe that the USX can be significant for Solana, despite it's still pretty early and the yield is not very attractive. DeFi integration, even though there are some, but not really comprehensive. But this is only live for 3 weeks, so still a long way to go. And it's actually making a lot of progress already. Right now, I think it's the largest Solana native yield-bearing stable right now, only 3 weeks after launch. So that is why I think this might be a good project, and that is what the video is about.